Welcome back to Investing Talk Podcast.
Today we're looking at actinium.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. Actinium is focused squarely on targeted radiotherapy, a segment of oncology that's, it's seeing massive structural tailwinds.
Right.
Their financial profile, however, it looks really volatile at first glance, which is, pretty typical for a biotech at this clinical stage. But we need to separate operational volatility from structural weakness.
That is the key distinction, isn't it? Because when I looked at the recent revenue, the numbers are, they're alarming if you don't have the context. They just reported robust revenue, over $1.1 million, which is great.
Right.
But the immediate projection shows a plummeting drop-off down to just 81,000. I mean, that sounds like a fundamental problem.
It does, but it's entirely a timing issue. You actually hit on the critical piece right there. Grants and milestone payments. In the world of clinical stage biotech, revenue often comes in these large, lumpy chunks.
So the $1.14 million was tied to a specific trial success or a big grant, and the 81,000 is just the baseline before the next big payment hits.
Precisely. That sharp projected decline is purely because of that timing. It doesn't signal a loss of traction or a failed program. It just means the revenue schedule is sporadic.
I see.
This is exactly why analysts aren't panicking. They're already forecasting a strong rebound in late 2025 and into 2026.
Okay, that clarifies the revenue noise. But even so, R&D spending in this space is just astronomical. They must still be years from profitability. How's their balance sheet holding up? Is the burn rate sustainable?
That's a great question because R&D is definitely the main driver of their negative earnings per share right now. That's totally standard. But the trend, and this is the important part, the trend is unequivocally improving.
Improving how?
The EPS, while still negative, is forecasted to narrow dramatically. It's expected to go from negative 183 this year down to a forecast of negative 103 by 2029.
So the burn rate is actually getting better.
It is. And it shows analysts believe the path to commercialization is getting clearer. They've recently raised earnings guidance, which is a really strong sign.
An improving trend is one thing, but cash is king, especially in biotech. What's the cash position look like? Are they going to need to dilute shareholders soon?
That's where their foundation is remarkably resilient. Their balance sheet is robust. As of Q2 2025, they had $28.7 million in cash. And here's the kicker. Total liabilities are minimal, just $12.3 million.
So they have strong net cash position.
A very strong net cash position. It gives them a good runway to run these trials without having to immediately resort to dilutive financing.
That leverage is huge. But how are they narrowing the EPS trend while spending so much on R&D? Are they just cutting programs?
No, and what's truly fascinating is how disciplined their cost control has been. They're spending smarter, not just less. We saw it in the Q3 results. Operating expenses fell, significantly, dropped from $12.6 million to just $5.8 million year over year.
Wow.
That kind of capital efficiency while moving into late-stage trials is exactly what institutional investors look for.
Okay, since the financials look resilient, let's talk about what they're spending that money on. The science. Oncology is so competitive. What gives this company a real edge? What's their moat?
Their advantage is twofold: IP depth and a pioneering position in targeted alpha therapy. Their intellectual property portfolio is enormous. They hold over 250 patents.
250 patents. That's not just paperwork. That's like a fortress around their technology.
Exactly. It creates a defensible market position. They're not chasing the market. They're sort of establishing the standards. Their current focus is on high-value assets like actin-AB and ATNM 400.
Right, for blood cancers and solid tumors.
But if we had to pick one asset that really defines their value proposition right now,
which one is it?
It has to be IOMAB-B. This is the centerpiece. IOMAB-B is a first-in-class targeted radiotherapy that could, and I mean this, revolutionize treatment for acute myeloid leukemia, or AML.
So it's about making a really high-stakes procedure safer and more effective.
That's the goal. And that expertise, combined with the IP, allows them to capture gains as this whole radiopharmaceutical market expands.
That makes sense. Okay, let's connect this back to the financials, specifically that massive deferred license revenue.
Yeah.
If IOMAB-B is the key its success in Europe is tied to a huge payout, right?
Absolutely. This is the single biggest financial factor to watch. The company has a significant $35 million in deferred license revenue from a deal with Immedica.
And that's all contingent on getting approval in Europe.
The entire amount is.
$35 million, that's more than their current cash on hand. It would double their liquidity overnight. But it also means that regulatory decision is a huge binary event.
It creates a very high-stakes scenario. That payment will either hit in 2026 or it won't. So if you're an investor, you have to be watching the European Medicines Agency's progress on IOMEB-B very, very closely.
Okay, so the science and the financial structure are strong, assuming a positive outcome. Let's look at the market. What did the technicals say about investor confidence?
The technical setup really confirms the positive sentiment. The stock's been in a decidedly bullish trend all year. You see that clear pattern of higher lows and higher highs. It signals stable accumulation, not just speculative spikes.
What's the short-term trading range looking like?
It's currently in a range from about 103 up to 241. Based on the pipeline news, I'd say a 3-month bullish target is somewhere in the 180 to 260 range.
And it's above the key moving averages.
Comfortably above both its 50-day and 200-day moving averages. That's a classic technical sign of structural momentum. And the RSI is healthy, around 58, so it's not overbought.
What I find interesting is the volatility. Usually a biotech with a $35 million catalyst would be swinging wildly.
That's the key counterpoint, isn't it? The 30-day volatility is surprisingly low at just 3.6%. This suggests institutional money is quietly accumulating shares because they believe in the long-term story.
Okay, so stable accumulation, strong technicals. What are the informed players doing? The analysts and, more importantly, the insiders.
The street is overwhelmingly bullish. Analyst consensus is a strong buy with an average price target of $4.50.
That's a massive upside. Are the insiders selling into that strength?
Quite the opposite. We've seen strong insider buying, totaling about $1.2 million worth of shares bought in the last 90 days. For a company this size, that's a really substantial signal of internal confidence.
That internal vote of confidence is incredibly powerful. What about the big funds? Are they loading up?
Institutional inflows are generally increasing, which is supporting that low volatility trend. There is one little nuance, though. Vanguard did file an update showing a slight reduction in their ownership, down to 4.39%.
Is that a red flag or just portfolio management?
It's almost certainly the latter. When a fund like Vanguard rebalances, they often trim positions that have done well. It's more of a typical portfolio realignment, not a loss of confidence.
Got it. Now for the moment of truth. The catalyst calendar. Over the next 3 months, what specific dates should we be watching?
The calendar is packed. The biggest one is coming up on December 11th, the release of additional data for ATNM 400, specifically in breast cancer.
And that's critical because it could expand the drug's use beyond its current targets, right?
Exactly. A favorable readout would dramatically validate the asset and unlock a much larger potential market. It would really boost visibility for 2026.
December 11th.
Yeah.
Okay, what about financial milestones?
We have 2 key earnings reports. First, November 14th, which should confirm their progress and cash runway. But the more crucial one is the Q4 earnings in mid-February.
What are you watching for there?
That's where we'll be looking for management's official guidance on cash burn and, most importantly, any update on the timeline for that $35 million Immedica payment.
And beyond company news, we also have those market flow events, like ETF rebalancing.
Exactly. Keep an eye on the ETF rebalancing around December 20th, and then the institutional 13F filings around January 15th. Those can create some short-term volatility.
Okay, finally, what about the speculative buzz? Is there any credible chatter about something bigger on the horizon?
There is. The market chatter is pretty persistent and I'd say credible. It suggests they're in advanced discussions with a global oncology leader for a potential partnership.
That would be huge. A partnership like that would not only bring in capital, but also validate their entire technology platform.
It changes the risk profile completely. And longer term, this all points toward M&A. Their IP moat and late-stage pipeline make them a very attractive acquisition target.
Okay, before we give a final rating, let's talk about the downside. What's the primary risk here?
Well, according to their disclosures, company-specific operational risks are pretty limited. The core risk is the classic biotech risk, clinical and regulatory failure.
It all comes back to IOMEB.
It does. If that European regulatory decision is negative, it stalls their growth trajectory significantly. Everything hinges on that.
So, We have strong fundamentals, disciplined management, a commanding IP position, and multiple near-term catalysts.
Our overall rating is highly bullish, a 9 out of 10.
That's a strong conviction. So what's the recommended investment horizon?
It's attractive for both. It appeals to short-term traders playing these upcoming catalysts, like the December data. But fundamentally, it's compelling long-term investment in the structural growth of radiopharma.
Right.
They're sitting on a critical intersection of clinical promise and financial stability, driven by that robust cash position and the highly valuable IP asset, IOMAB-B. The key question investors must track is execution, how effectively and quickly they can convert that clinical success and those crucial deferred regulatory milestones into sustained commercial revenue growth. The difference between success and failure on that European regulatory decision is the single biggest factor dictating their financial visibility into 2026 and beyond.